Social impact investing in India. The social sector plays a vital role in supporting various social and economic needs in India through a field-based approach. In the context of India, where economic growth has not been able to cross the last mile and with socio-economic disparities widening, the social sector has now started to explore the market-based approach to tackle the challenges of inclusive growth and sustainable development. Alternative investment funds in India. In the year 2012, SEBI enacted the Alternative Investment Funds (AIF) regulations which included social venture funds. AIFs are funds established in India for the purpose of pooling capital from Indian and foreign investors for investing as per a pre-decided social impact policy. An AIF means any fund established or incorporated in India in the form of a trust or a company or a LLP or a body corporate which is a privately pooled investment vehicle which collects funds from investors, whether Indian or foreign, for investing it in accordance with a defined investment policy for the benefit of its investors, and is not covered under the Securities and Exchange Board of India, Mutual Funds Regulations, 1996, Securities and Exchange Board of India, Collective Investment Schemes, Regulations, 1999 or any other regulations of the board to regulate fund management activities. Laws relating to social venture funds in India. Offshore social venture funds tend to pool capital and grants outside India and make investments in India like a typical venture capital fund. Such offshore funds may not directly make grants to otherwise eligible Indian opportunities, since this may require regulatory approval. Onshore social venture funds are required to be registered as Category I AIFs under the specific subcategory of social venture funds. In addition to the requirement to fulfill the conditions set out in the definition set out above, social venture funds under the AIF regulations are subject to the following restrictions and conditions. Requirement to have at least 75% of their investable funds invested in unlisted securities or partnership interest of social ventures. Allowed to receive grants, insofar as they conform to the above investment restriction, and provide grants. Relevant disclosure in the placement memorandum of the fund will have to be provided if the social venture fund is considering providing grants as well. Allowed to receive muted returns. Characteristics of social venture funds. Social venture funds tend to be different from venture capital funds or private equity funds not just in the investments that they make, but also in the nature of commitments that they receive from their limited partners investors. The following is a list of some of the characteristics that a social venture fund may expect to have. Investors making grants, without expectation of returns, instead of investments. The fund itself provides grants and capital support considering social impact of such participation as opposed to returns on investment alone. Fund targeting par returns or below par returns instead of a fixed double-digit IRR. Management team of the fund participating in mentoring, incubating, and growing their portfolio companies, resulting in limited token investments, similar to a seed funding amount, with additional capital infused as and when the portfolio grows. Investment strategy. Based on the market scenario, Impact Fund would typically focus on priority sector enterprises to develop a diversified portfolio across the following subsegments, for example, SME financing, affordable healthcare, SME financing. India has a huge entrepreneurial class of people who run their business with no formal source of financing. Thus, there is a great demand-supply gap which needs to be tapped. There is a tremendous opportunity in the SME financing segment with products such as asset financing, working capital financing, venture debt, loan against mortgage. Affordable healthcare. With dismal investment in public healthcare and a huge demand for quality healthcare services, there is a high demand-supply gap in the healthcare sector. The total GDP allocation towards healthcare is dismal in India, while the out-of-pocket expenditure by households was close to 70%. Surprisingly, health insurance caters to less than 10% of the population. Social impact funds could look at financing affordable healthcare service providers. Thus, the investment approach for a fund should be centered on access, affordability and quality. Trends in impact investing. The standard of what constitutes an alignment of interests between fund investors, LPs, and fund managers, GPs. India-focused fund or India-based fund has undergone some degree of change over the years. Typically, LP participation in a fund is marked by a more hands-on approach in discussing and negotiating fund terms, which by itself is influenced by a more comprehensive due diligence on the track record of the GP and the investment management team. Investment Committee and Advisory Board. Sophisticated LPs insist on having a robust decision-making process whereby an investment manager will refer investment and/or divestment proposals along with any due diligence reports in respect of such proposals to an investment committee comprising representatives of the LPs as well as the GP. The investment committee is authorized to take a final decision in respect of the various proposals that are referred to it. In view of this, the composition of the investment committee and the nature of rights granted to certain members can become very contentious. The investment committee is also empowered to monitor the performance of investments made by the fund on an ongoing basis.